In a milestone for crypto adoption, the SEC today gave the green light to the trading of Bitcoin exchange-traded funds (ETFs). CoinDesk rounded up reaction from across the crypto industry to the news. It's here. The U.S. Securities and Exchange Commission (SEC) made an omnibus decision today to approve a host of spot Bitcoin ETF applications. More than 10 years after the first filing for a crypto-based exchange-traded fund, a type of financial product designed to track other assets like commodities and equities, the SEC has decided to approve the first ETFs that follow the spot market price of Bitcoin. Many analysts believe these products, introduced into the market by a host of Wall Street heavyweights including BlackRock, Fidelity and VanEck as well as a number of crypto-native firms, could drive significant capital into Bitcoin, BTC. Larry Fink, the CEO of the world's largest asset manager BlackRock, has said the firm filed to list a Bitcoin ETF last year specifically because there was clear customer demand for something like it. That decision opened the floodgates, with a number of competing applications soon following. Bitcoin gained over 160% since that moment, based on the idea that if the SEC approved Bitcoin ETFs, any number of retail investors and companies would choose to invest in Bitcoin. Standard Chartered predicted that upwards of $100 billion could flow into Bitcoin ETFs in the US this year. All of this remains to be seen, but now, with the SEC's decision to approve 11 of the 13 Bitcoin ETF applications, the world will. CoinDesk spoke to a number of experts, traders, executives and analysts, to get their take on what this moment means for the entire crypto industry going forward. Hopes are extremely high for Bitcoin ETFs, which just won SEC approval, and their ability to transform cryptocurrency investing. Gold ETFs transformed the gold market 2 decades ago, sparking a huge rally in gold's price, and some experts think Bitcoin ETFs could do the same thing. Standard Chartered sees Bitcoin's price doubling to $100,000 this year. Bitcoin ETFs, which just won regulatory approval in the US on Wednesday, have been hugely hyped by dreamers, exhilarated by the prospect they will open up cryptocurrency investing to the masses. But there's always the danger that the newest new thing in finance will turn into a dud. Take meme stocks like GameStop, AMC and Hertz, which won a feverish following during the pandemic that shot their prices to the moon. But it was a fad that passed. Sergey Nazarov, co-founder, Chainlink, Bitcoin ETF approval has made it clear that traditional financial institutions have a significant role to play in determining how the crypto markets evolve. This was evident when PayPal launched the ability to buy certain cryptocurrencies, and some banks started offering crypto custody. The approval of the spot Bitcoin ETF will lead to an influx of traditional large top-tier financial firms like BlackRock and Fidelity, which will likely actively participate in the crypto markets. Gavin Michael, CEO, backed. Today's SEC approval of a spot BTC ETF represents a significant milestone for the industry, and it is my hope that it signals a new era of regulated crypto products offered by reputable, trusted crypto companies. This ETF approval has the potential to not only accelerate market adoption but also to foster lasting momentum within the industry. As we move forward with more ETF applications, it is essential for ETF providers to collaborate with qualified custodians who have a proven track record in safeguarding digital assets like BTC. This collaborative approach is crucial in reducing risks and creating a secure environment for investors. Kristen Smith, CEO, Blockchain Association. The approval of a Bitcoin ETF adds more pressure on Congress to pass fit-for-purpose legislation for the digital asset ecosystem. Consumer demand is poised to grow exponentially, and those consumers, investors, and entrepreneurs deserve clear regulations that address many of the outstanding questions the industry has been urging our elected officials and regulators to answer.